Bitcoin is booming.
We are going to look at cryptocurrency and or Bitcoin in terms of currency to transact.
Believe it or not, we've sold 17 cars, Bentleys and Rolls with Bitcoin.
Musk is driving so much of this market, it's fascinating.
There has been a lot of talk about digital currencies, and companies like Tesla, Square, and PayPal have all been getting into cryptocurrency in a big way, with big billion-dollar bets. Whether all this turns Bitcoin into a viable currency instead of a speculative investment or a store of value is yet to be seen. However, that has not stopped retail investors from getting in on the act, and Bitcoin recently topped $58,000 for the first time in February 2021. Today, each Bitcoin is worth over $61,000. Some early adopters have become billionaires, and a significant number of people have created life-changing wealth. It is very rare to hear people talk negatively about Bitcoin, but today I will explain the argument against Bitcoin using datasets and debunk the whole idea of investing in cryptocurrency. Welcome to The Nimble Nomad. My name is Arjun, and this is the channel where I talk about money and investing related tips, tricks, and hacks. I would really appreciate if you can give this video a like and subscribe to my channel. I made a video a few months ago on my channel where I shared my position of not investing in Bitcoin, and I got many comments saying that I did not understand Bitcoin as an investment and that its function as a store of value or its position as a digital gold generates value as an asset class. However, in today's video, I will be using data and facts to debunk both of these points, which are often used by Bitcoin bulls to make the argument for investing in Bitcoin. If you would like to watch my original video, I will add a link of it in the video cards and description below. There has been a lot of discussion about why Bitcoin is revolutionary and its technology is so superior. And whilst I don't disagree with any of this, this has absolutely nothing to do with if Bitcoin is a good investment. When investing money, you need to remove yourself from the intricacies of the technology that Bitcoin offers and consider it purely as an investment class. Many great minds in the world of finance like Robert Shiller, Warren Buffett, and Charlie Munger have consistently said that Bitcoin does not have any value. To discuss the facts, let's hear Warren Buffett's argument against Bitcoin and hear him talk about value creation. Now, before you judge Warren Buffett for his age and lack of knowledge and investment focus in technology or Bitcoin, Warren Buffett has been immensely successful in the world of investing, and his track record cannot be discounted. So let's quickly look at a clip of him talk about Bitcoin, and then I will be back to dissect this in more detail.
What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end.
To summarize, Warren talks about asset classes that inherently have the ability to generate some form of a tangible value. To explain further, there are two types of assets in the world: value creating and speculative. A value creating asset is an asset with the ability to generate profits and cash flow. This typically comes in the form of a business that is profitable and pays dividends, properties that generate rent, or even farms on which you can grow food on. These assets have an intrinsic value which you can see and calculate without the hope that you will be able to speculatively sell these to someone else at a higher price. A speculative asset is something that does not have any intrinsic value associated with it, but the only way you can make money on these is on the hope that someone will be able to pay more for the asset in the future than what you bought it for. Bitcoin falls into this bucket of it being a speculative asset, along with gold, silver, art, watches, etc. One of the main reasons why Bitcoin has generated a lot of hype recently is that Bitcoin is considered as an alternative store of value. And there are plenty of people that have compared Bitcoin to it being a digital gold.
I think it is exactly that. I think it is a replacement to gold. But again...
But you like gold. You're saying you like non-productive assets.
I like in a portfolio. Again, my portfolio is 99% risk on, 1% risk off. And in that 1% risk off bucket, I think that something like Bitcoin is really important. Why? Because it is not correlated to the rest of the market.
But the key factor that people miss out on when they invest in Bitcoin is the power of compounding, which gold and even Bitcoin as a digital currency are unable to provide. On my channel, I have been a huge proponent of dividend stock investing, which allows you to compound your wealth over extended periods of time. It is one of the main means through which Warren Buffett has actually made his wealth. Let's take a historic comparison of investments in gold and silver to capital invested in the S&P 500 with dividends reinvested, of course. I have here on the graph a representation of the historic returns compared between gold, silver, and the S&P 500 index. When you compare gold and silver with stocks as an investment over a 10-year period with dividends reinvested, it becomes painfully obvious that the stocks have outperformed these precious metals as an investment. Over the last 10 years, the stock market provided returns of 198% compared to just 19% from gold. Moreover, when you extend this time horizon further to 30 years, the S&P 500 returned a whopping 979% versus just 386% from gold. Over a 100-year period, the stock market absolutely crushes the investments in gold and silver. The stock market returned an insane 56,087% versus just 8,598% from gold. Now, a lot of people at this stage will say that look at the last 10 years, Bitcoin has outperformed the stock market, and yes, this is true. However, the same also applies for gold, where gold has outperformed the stock market at certain points during its history. But when you take into consideration long-term investing with the effect of compounding, the stock market always outperforms gold and silver. The other reason why Bitcoin has had a lot of sensationalism is because of the wild numbers that have been consistently associated with Bitcoin and the value of Bitcoin. But don't just believe me. To explain this, let's look at a simple explanation from Nobel Prize winning economist Robert Shiller.
Does Bitcoin, Ethereum, Litecoin, does the whole crypto craze say more about us and psychology than it does maybe about the future of money?
Yeah, so I think that the value of Bitcoin is exceptionally ambiguous. you just put an upper bound on it with the value of the world's money supply. But that upper bound is awfully big. So it could be anywhere between 0 and that. That's very different from most stock. Most stocks, or any investment you buy, there's some trading history, there's some earning stream. So the mind has trouble dealing with such ambiguity. Neuroscientists have shown that the brain works different in ambiguous problems, in making choices in ambiguous situations. Now, you might think that people who are educated will transform the decision problem into something precise involving probabilities and scenarios, but it doesn't seem like the brain is doing that.
In a recent article published by Barron's, a Bank of America securities analyst quoted that 95% of all Bitcoins are controlled by just 2.4% of the accounts, and 20% of the Bitcoin supply is sitting in lost or stranded wallets. This proves to me further that people are holding on to Bitcoin for dear life, and therefore Bitcoin currently does not operate akin to a currency, which would therefore further inflate the potential for a future price and valuation of Bitcoin. Like always with Bitcoin, this is only a couple of data points to consider, and you should always do your own research. Bitcoin does not meet my investment criteria of value creating assets and my long-term goals, so I am not going to be investing in it. If this video helped you out, please don't forget to like and subscribe to my channel. Thanks a lot for watching, and I will see you in the next video.